Welcome to High Level Real Estate, guys, with me, Rusty Bartholomeo, the Einstein of real estate. Today is the very first podcast that we're making, and it's with Miss Karah Bowles of Hometown Mortgage Solutions. We're going to be talking about FHA loans. We're going to be talking about first-time home buyers. We're going to be talking about how to get you into your first home. Let's roll. Well, I have here today Miss Karah Bowles. Karah?
Hello.
Nice to have you on here. We've been working together for quite some time. I mean, you know what, 6 years?
I say, when did you get into real estate?
2018, the
Okay.
end of 2018.
Yep.
I think is when you and Hannah took me to Cork and Pig.
Nice.
And we did, what was it that we did? Bar keys to home keys.
Yep. That's what I was trying to think of it too. Yeah.
So that was our first meeting, and we've been working together ever since.
Yep.
So
It's been a long time. It's been fun.
it has been a lot of fun. So this is a podcast that we've started, and what I wanted to do is you're our first guest, or my first guest, and I wanted to talk about first-time home buyers because they had asked me, you know, so well, what would you recommend for a first-time home buyer? What would be the first thing? I said,
Yeah.
a mortgage lender, because you got to know the price range. So
Yeah,
you know.
definitely.
So I wanted to bring you on here and have you talk a little bit about maybe some of the points on your side of it, because I have my side that I can talk about, but I can't really talk about your side as well as you can.
Sure.
So what would you recommend? I mean, as far as somebody coming into you, hey, Karah, I'm looking to get a loan.
Yeah. So, I mean, obviously, first-time home buyers are something we're both really passionate about.
Right.
I mean, it's some of the most fun people to work with because they don't have any bad habits yet, or anything like that. And there's such a drive inside of them that's not always there in the future. So, the first thing I would say to first-time home buyers is just don't be scared. We start with a soft credit pull on everything, so which means like there's no commitment, which. Our generation, commitment's a hard thing, right?
Yeah. Yes, it is. Speaking to me, speaking to someone like me who's been, single forever, I do have a commitment issue. But I see what you're saying, because I have a lot of folks that ask me about it.
Right.
And they're like, well, but I'm so concerned about this, that, and the other. I'm just like, go talk to Karah.
Yeah.
I promise you, she'll help you.
Yeah.
She will get you past all that, and then I'll take over from there, and we'll get you going.
Yep. So, and with that credit score or credit pull, the lowest we can go on an FHA loan is a 580 credit score, and they have the most lax, requirements with their loans. So most commonly used for first-time home buyers because it's a low down payment, low credit score requirement. You can kind of stretch your debt to income ratio, which we can kind of dive into that. But but really, I mean, it's as simple as that. Just making the phone call and diving in. I think that aside from the fact that people are afraid of their credit, they're also afraid of down payments. I don't have any money. And so forever, and it's crazy that I still get this question constantly, is I need 20% down. And I
get that a lot.
It's such an old rule. It's not the case anymore, So truly, you can get into a house without a down payment. There's several state programs. There's local programs that you can use to get into a house. But we actually there's something called a USDA loan, which is anything for a rural area, which in San Angelo and being in West Texas, anything outside of San Angelo qualifies for that rural area USDA zero down payment program. Anything. So, like everything outside of the city limits qualifies. So
all my folks looking for land outside of city limits, right here, USDA loan.
Yeah, and it's no different as far as like the process really of an FHA loan. So it's easy to use. So I think it just wasn't talked about much, due to the. COVID years, everything was so fast and furious. You had to just have things in order. So it's becoming more common again.
That was an interesting time, wasn't it? The COVID crisis, or whatever you want to call it.
Yeah.
It was. Everybody was hiding away, but everybody bought houses.
Yeah, because you had to have somewhere cool to stay.
Yeah, so if you didn't have anywhere to stay, you was like, I got to buy a house.
Yeah, yeah.
Which it was a good time for realtors, good time for mortgage lenders.
Sure.
Now is a little more difficult. Obviously, it's the last 4 years have been interesting.
Right.
rates going up.
I was going to say, monkey in the room, or elephant in the room. That's what it is.
Elephant in the room.
Elephant in the
there could
room.
be a monkey in the room.
I was thinking monkey on your shoulder, but yeah, elephant in the room. Obviously rates have gone up, but there's still a lot of ways to keep the rate low, whether it be like temporary buy downs, get some seller credits. Because you can talk about that. Sellers are helping pay closing costs and stuff now. So
very much. I'm seeing a lot of that.
Yeah, so buy down the rate. And so there's still definitely ways to keep it affordable, even though people are, a little bit more timid because of that rate. But hopeful that things will start coming down next year. So
I definitely. So what, as far as for a first-time home buyer, I get this all the time. Well, what would my interest rate be? And of course, I send them to you. That's your main thing. But let's say if they had a lower than, like 6%. A 600 credit score. Mm-hmm. What would you assume those payments or the interest rate would be on something like that for a 600 credit score?
Yeah, so 600 credit scores, like we were saying, basically just qualifying for FHA, things like that.
Right.
So I would say you're probably looking around mid to low sixes right now.
See, that's still not that bad.
Yeah.
And that's what I think a lot of people don't. They went through this 2020 and saw these 2.5%, 3% interest rates. And I'm like, that's not going to happen
realistic.
again. That's not realistic. Yeah, it's not realistic.
Yeah.
It's not going to happen again. If you went back to, I think in 2018, 2017, what were the rates? They were, 5%, 6%, right?
Yeah.
So, we're really right back to pre-COVID
exactly.
rates.
Yeah.
So, and hopefully that does maybe unfrightens a few folks in realizing that.
Yeah. Well, and I think really instead of focusing on, anything, take out the stressful pieces and let's just look at your budget. Don't worry about the rate. Don't worry about your credit score, your down payment. Let's just look at your budget, which is something that we look at whenever we look at your debt to income ratio. So that's how much money you make versus what your monthly payments are, and that's something that I really like to help people with is figure out what are they comfortable with, not what can you afford on paper. What are you comfortable with as far as, that monthly payment goes? We use the word house poor. You don't want to be married to that house. You want to still be able to enjoy your life and live it. And so, with talking to people and especially whenever we start early with the soft credit pull and kind of laying out someone's plan, that's a big piece of that conversation is, what does your budget look like? What are your expectations from this? How long do you think you'll be here? Stuff like that. Because most first-time home buyers are really in their house from maybe 5 to 7 years, and I feel like that time frame has become a little bit shorter.
It's become a little shorter. I've noticed that. Just in the 6 years that I've been doing real estate, what I've noticed is, some folks that I was probably half the people that I sold houses to in 2019 turned around and sold within the 3 years, 4 years. Almost all of them.
Yeah, we're very blessed. San Angelo has such a strong local economy that truly, I've been in banking since 2006.
Dang.
Yeah.
Jeez, okay.
I was in diapers, no. No, but even in my time in this industry, I have never seen prices decline in San Angelo, meaning like housing prices. We usually see some demand and some growth happen, and then at some point, it just levels out, is what I would say. Like it stabilizes and goes on. And so people like you're saying who bought during that time frame, whenever the demand hit again, whenever rates were low, they were able to then flip their homes and sell, to make a good chunk of change that they would have never had if they were renting,
Exactly.
So.
And they would have, and that's what I saw it's like I helped you buy in 2019. I had some of them in 2020, 21, hey man, I'm going to upgrade, what can I get for my house? And I tell them, I do the CMA and I run the market analysis. I'm like, all right, well, it's probably right around here. And they're like, I only paid this much for this house. And then they go and upgrade and they get a nicer home.
And by chunk of change, we're talking what? 20,
30, 40, 50.
I
I've seen anywhere between 20,000 and 80,000.
Yeah.
And that's a huge.
Yeah, I can't save that much money in that time frame.
Not in 2-3 years.
Yeah.
I've literally seen them take a home, and in 3 years, I've got 60 grand I get to throw into this new house. I'm like, wow, that's incredible.
Yeah.
Where else can you save that money?
Exactly. And I think that's what's so important for first time buyers to remember is you're not going to be in this house forever. So it's a stair-stepping moment, but it is going to be yours.
It's a stepping stone.
It's something that you're going to be able to invest into and invest in yourself because chances are, like we were just saying, and history has shown, whenever you go to sell that, given the right market conditions and things like that.
You're making money.
You're making money for sure. which again is just not something that's going to happen if you're renting. So
Yeah.
I think that, our day and age, we all want that instant gratification. So you have to remind yourself this is a stair step. So.
It is, yeah. It's a stepping stone because, and too, like, I've had some folks that, well, I don't know if I'm ready to buy yet. I'm like, well, what would prevent you from buying? Why are you not ready to buy? Well, I just can't afford the house I really want right now.
Right.
And that's exactly what I tell them. Like, well, okay, you can't, but you can't afford to continue to rent because you're not going to save.
It's 100% interest.
It's 100% interest, exactly. You're paying 100% instead of 6%. You're paying 100%.
Right.
There's a massive difference.
Yep.
So yeah.
Yep.
Any other big tips? What would you
No,
think?
I think one of the other misconception is we have to have a 2-year work history,
Yes.
and so the common people or questions is well, I haven't been with my employer for 2 years. That doesn't matter. We go off of like multiple jobs, things like that. It doesn't matter as long as we can make it make sense. Which I've written plenty of work letters for people with 8 different jobs. I can make it work, I promise.
I've seen you actually make it work. Actually, I can vouch for you. I've had several folks that were like, well, I'm kind of, and this is one thing I ask them when they say, hey, well, I've only been at my job for like a year and a half. I'm like, okay, well, what did you do prior?
Right.
Well, I was doing the same stuff essentially, but it was for this company.
Yeah.
Well, hey, they can use that. I guarantee you, it's usable. They can make that work.
Yeah, absolutely. And also school history. So if you were in school, post high school, any kind of
Right.
post high school education, we can use that as your work history as well because it's basically then putting in the time for your career.
For the career. Yeah, and that makes sense. I didn't realize you could do that though.
Mm-hmm. Yep.
So you can actually use like a high school history or post high school.
Post high school, yeah.
Post-high school.
So like if you went to Howard or ASU or anywhere like that, in preparation for even if you didn't end up going into that career field,
It's still usable because it still gives you.
Like I said, we can connect the dots somehow. Yeah.
Okay.
Yeah. I've had people go from, let's say Walmart to the oil field to car sales. Well, somewhere there was some management and sales experience and customer service and all of that I can connect and make it happen.
Work.
Yeah.
Okay. See, yeah. And I didn't even realize that. I thought, well, it has to be kind of similar, but it didn't have to be similar.
Not really.
Not really.
Yeah.
Okay.
There's
as long as
ways
there's
around it.
continuous work history and
Yeah.
you're not unemployed for,
Yeah. And even if you were unemployed, if you have a gap more than 6 months, then we can go back further than that and say, okay, well, where were you before that?
Okay.
So say you.
So even that's overcomable.
Exactly. So say you were a stay-at-home mom for a while or parent, or you had an injury or something that prevented you from working for a while.
Right.
That's even overcomable. We'll just go back further than that and verify that history. So like I said, lots of loopholes. It's just knowing how to get through that gray area, which is something we're pretty good at.
Exactly. And that's why I think my biggest, again, what's your number one for first-time home buyers? Karah Bowles. Get you a good mortgage lender. I promise you, because they can navigate the field of getting you the cash. And then, of course, my job comes in is to navigate the field of finding a home within your criteria of what you're looking for, getting you the best deal, writing the contract, making sure that everything is proper, getting the showings and stuff like that. I have obviously a different role, but I was really interested in your role because you are very good at what you do. You've been doing this a long time. And like I said, since I've been in real estate the last 6 years, I've worked with you a lot.
Yeah.
Over the years.
Yep.
And you've always, I remember, I guess it was your last child that you had.
Mm-hmm.
I had called you, and I knew it was close, but I didn't know you'd quite had him yet. And I'm like, hey, by any chance, could you get me a new letter for this guy? We found this house. It's really good, but we need the letter to be right here. And you're like, yeah. I'm in the hospital right now, but I've got my laptop with me. I'll go ahead and take care of that for you.
That's a true story.
Yeah, it is. I was like, I just had my kid. I'm like,
yeah, it's
all
fine.
right,
It's
you're fine. No, I'm good. I'm like, no, you have to do it right now. Oh no, I got it. I had it that same day.
Yep.
So no, I appreciate you very much.
I think that's what's special about real estate mortgage. What both of us do is, whenever you're passionate about it and you love it, it just makes it fun and easy.
It makes it fun
Yeah.
and easy. It's like, I've had people, oh, I'm so sorry. And I really want to, I don't mean to disturb you. I'm like,
Yeah.
what?
This is what we
You're
do.
not disturbing. What do you need?
Yeah.
Like, well, I really want to check out this house, but I can't go to market. Is there any way you can just go right now? I'm like, if they'll let me in, I'll go.
Yeah.
You
And I think
know?
that's something that you're so good at,
Yeah.
as far as first-time home buyers is just making them feel so comfortable. You're so welcoming, and
Try.
you make sure that they don't feel stupid by asking those questions or anything like
Yeah,
that.
I mean, well,
that's what we do.
That's what we do. That's
Yeah.
what we're there for. We're there to not only, help them navigate the waters of buying a home or first-time home buyer or second or third,
Yeah.
but we're also there to help them answer those questions that they don't maybe know.
Yeah.
And even I've noticed even people that bought 2 or 3 times, they still have questions
Oh, yeah.
because they might not have
When
that.
things change.
And in our business, things change every year. It seems like.
What do you think is the most commonly asked question?
The most commonly asked question?
Yeah, for a realtor on your side.
It's hard to say, but I will say this. The most commonly asked question is, well, how much is my down payment going to be? Or how much money do I need to get into a home?
Yeah.
That is probably the number one question.
Yeah.
And, of course, my answer is, well, kind of depends on the price range you're looking at. It depends on your lender. Let's get you with a lender, and they can break it all down for you, and we can figure out what your range is, where you're comfortable, and then they can kind of tell you, okay, about your down payment's going to be this much, and I can kind of give you an average on the closing cost. And then sometimes, like right now, sellers are helping closing costs.
Yeah.
I've had several, I would say the last probably 4 or 5 that I've closed, the seller has actually added in and helped with closing.
How much would you say?
I would say on average, they're paying about half.
Okay.
So if the closing was $5,000, they're coming up with $2,500 on the other end.
Yeah,
Of it.
yeah. Which, I mentioned some of the down payment assistance programs. There's certain ones like T-Shack is one of the state assistance programs that we use quite a bit because they've got some pretty broad rules, as far as income limits and things like that.
Just recently had a guy that had that, and I had never dealt really much with the T-Shack stuff, and quite interesting though. But yeah, he was, just able to get it done right away.
Yeah, well, and so they can do up to a 5% down payment assistance on that. But it's the word down payment assistance is kind of broad there. So if you only need 3.5 for your FHA down payment, you have another 1.5 sitting there that you can use to cover some closing costs. So
you can use that to cover closing and a down payment?
Absolutely.
Oh, wow. Okay.
Yep.
So that's even better. So
Yeah.
guys, ask your mortgage lender about, help.
Yeah.
You said T-Shack?
T-Shack.
Yeah. So
Yeah.
very cool.
I would say it's one of the most common. But yeah.
Yeah. Okay. Very cool. Yeah. And I do get that, but that my most common question is, how much is it going to cost? What's the down payment? Closing costs.
Yeah.
My next, probably the biggest question I would say besides that is, how much is my monthly payment? That's like the following question. I'm always like, I don't know. We haven't picked out a house yet.
Yeah.
What's the price range you're looking at? I can come up with something close, but I was like, if you want something real accurate, go to your lender.
Yeah.
Your lender, you guys handle so much when it comes to, the process.
Sure.
Essentially,
Yeah.
So.
Okay, so the hard part's over. We're pre-qualified. They get that golden ticket to go start looking for houses.
Yep.
What does that look like? What do they do?
So, on my end, it looks a little different, obviously, than your end. But on my end, once that's done, once for me, once the pre-approval is done, I typically will send them my app and say, hey guys, okay, hey, you're pre-approved. What is your range? Oh, well, I'm here to here. Okay, great. Where are you comfortable at? What do you want to stay in? I know you're approved for $400,000, but would you feel comfortable spending $400,000? Well, my payment would be this at that. Okay, well, what would you feel comfortable? Where do you want your, and that's when normally when I have them contact you as well. I'm like, okay, well, hey, yeah, they're approved for 400, but they told me they wanted their payment around here. Oh, well, they need to be at $350 for that. Okay, cool. So what I'll do is I'll tell them, hey, here's my app. Here's all the, put in $350. Find all the houses you want to view. Let me go through them first, though. Send them to me. And I always have them send me a list. Say, okay, hey, Send me the list of the homes you want to view. And then I always have them send me their criteria. Like, hey, so, here's the homes that you sent me. What does your criteria look like? Do you need a 3-bedroom, 2-bath? Do you need a 4-2? Do you need a 4-3? What's the square footage you would prefer? Do you care about a backyard, a front yard? Things like that. Do you want it completely updated? Do you want to update it yourself? All those things like that. And then what I'll typically do is go through all those homes that they send and kind of look through and say, well, and I'll call them and say, hey, listen, you sent me these 2 homes and they're really not meeting your criteria. We can view them if you want. I'm happy to show you all the homes you want to see, but they're definitely not within your criteria that you sent me.
Yeah.
So, and I think that's one of the things, I don't want to waste their time.
Sure.
You know, not so much mine. I've got plenty of it. I love doing real estate. I love showing houses. I love seeing houses. So for me, I don't care.
Yeah.
But sometimes, everybody's working. They've got multiple jobs most of the time in this economy. So, I don't want to waste any of their time. So I try to break it down for them a little bit. And then, of course, once they've got that, we figured out what we want to see, I go ahead and schedule the homes with the realtors that are there, get our appropriate times, map us out a good, so we're not going back and forth and doing this number here.
Right.
We're able to kind of say, okay, hey, we're going from point A to point B to point C to point D, and then we're done.
And then, like you said, it kind of helps, if you know the neighborhood, things like that they're wanting to be in. And that's one of the benefits that you really bring to the table is that being with ERA, Newland and Company, you're with one of the biggest agencies in town, which means that a lot of listings come through your office.
Come through my office, right.
So you commonly know about houses hitting the market before they're ever hitting Zillow or Realtor.com or anything like that. So,
I really do.
By kind of getting an idea of what they're looking for, you're able to find stuff that they didn't even know that they wanted.
Yeah, no, really, and that's what I do. So typically, it's funny you mention that. So after they send me all theirs, and I go through all of them, I'll go through because ERA, we do have the largest, in San Angelo. I think we have 100 agents.
Yeah,
I mean, it's
and
ridiculous.
Counting probably.
And counting, yeah. So what I do is I go. We have a board at the office, and it's a large board, and it has all the new listings, every new listing there, and I go through and say, well, what do these criteria look like? And I'll call the agent. Hey, what do you think? Well, it's this, that, and that. All right, cool. So I'll send that to my folks and say, hey, listen, this is just hitting the market. It's not out just 100% yet, but here's what it looks like. It's coming up. It meets your criteria. Do you want me to go ahead and set up a viewing?
Yeah.
If they don't want to see it, that's fine. But if they do, then I've hopefully I can
it
give
gives
it
them the
something
jump on several other people out there that are shopping. Without
I was going to say because
without the Einstein.
Exactly, without the you don't want to shop without the Einstein. Let me just tell you that right now. You want to make sure you have the Einstein of real estate when you're purchasing a home.
Absolutely.
And you want to have Miss Karah Bowles over here as your lender.
Yep.
I mean,
happy to help.
Dude, you do a great job.
Thank you.
You've over the last 6 years, I always recommend you to everybody.
Thank you. That means a lot. That means a lot.
Now your new one next, the hometown lenders.
Yeah.
When did you start? That was like 2 years ago.
So it's Hometown Mortgage Solutions.
Hometown Mortgage Solutions.
There you go. No, you're good.
Yeah.
So Hometown Mortgage Solutions started that in January of 2022. So basically, I just wanted to have a little bit more hand in what I was able to do for clients. So it gave me a little bit more flexibility, more freedom to move rates like they need to be, for them, whether it be create a new product, like we have a new construction program where we give them closing cost credit, things like that, just really be able to fit to our market. So, it's what Hometown's all about.
Absolutely.
And so it really it gave us a different spin on being able to help our clients. So,
and 100% local. I know all the girls there are local.
Yep. We have a great team. It's me and my best friend that started it, Hannah Vick, and then pretty much everyone that works for us is family of somehow. Like my mom works for us, Hannah's sister, different people. So and I think the difference is, I get this question all the time. I'm sure you do too. Online lender versus local lender, and what's the difference? know, and that is truly
Night
the
and day.
difference. Yeah. We can tell you lots of horror stories
Yeah.
of those online lenders, but truly what it comes down to is who cares the most and what are we doing for you? You can literally come and knock on my door, or I'm probably going to see you at my kid's football game or something like that.
Yep.
You know, so what we do and our reputation and how we care for our neighbors is really what the hometown difference is and what makes us a little bit better
Huge.
than the rest.
Well, and I will say this, and this is what I've had people ask me, what's the difference between Rocket Mortgage and whatever's, local here? And my first response always is, well, I'll tell you this. When you go to a big national company online, you are a number.
Mm-hmm.
That is it. You are nothing but a number. They put the formula in, spit it out. You're just another. When you go through like somebody like you, your reputation's on the line. This is a small town. If you're not on it, it comes back on your reputation.
Oh,
so
absolutely.
those local lenders are going to be so much more caring and so much more passionate about making sure that your experience is good.
Yeah. Well, and I think that also we pay a lot more attention to detail,
Yes.
up front, where,
Yeah.
the online lender may be quick to just like check off and be like, yeah, here you go, sure, but they haven't really dug into it yet.
They haven't, yeah, and then that's where, and in real estate, there's so many moving parts.
Right.
So then you get into the point of we're in the middle of a deal and it's been pre-approved with Rocket, and they're not communicating with me, they're not communicating with the title company, they're barely even communicating with the buyer.
Yeah.
And I've had that happen multiple times.
Yeah. Yeah. Not a fun experience.
Not a fun experience. It makes my job harder. It makes their experience very difficult. And it makes their experience that much more of a headache.
Yeah.
And it's already, buying a home is already a big deal.
Yeah. It should be fun.
It should.
You let us handle the
It
stress.
shouldn't, exactly. It should be fun. It shouldn't be a stressful thing for the buyer
Yeah.
or the seller. That if you have a good realtor, you have a good lender, you let them kind of handle the stressful parts, and then you just kind of,
Yeah.
Yeah.
Okay, so we've Mr. Einstein has taken us and looked at all these homes. We found the
Yeah.
one. What happens next?
So if we find the right one and we're all on the same page and all the fun things and all that, we write up a contract. Of course,
Okay.
I like to talk about it. Like with my folks when they're like, "Hey, man, this is it." I'm like, great, okay, good, I'm wonderful. Now, here's the asking price. Here's the listed price, rather. And honestly, so my big thing, I like to take them back to the house especially if we've seen
Several.
15 houses, and they're like, I keep going back to this one. I think we want to write the contract on this one. Okay, cool. Let me work on the contract, and let's set up another date to go look at it. Let's view it one more. Let's view it twice. You've seen it once, but let's go back and look at it again.
Yeah.
And the reason why I do that, and it's not to waste their time, because I want them to see it again before we turn the contract in and sign it and all that. But I also want to go through and have them look, because sometimes there's so many details on a house you miss the first time around.
Yeah, and especially like you said, if you're looking at 10 in one day, you
It's-
might be confusing two of them.
Exactly.
Or,
Or you forget, or you didn't
Yeah.
see something. So, the second, I like to plan the second one, and we just view that house.
Yeah. That's a
say,
great
hey,
idea.
Let's go look at this house, and let's take our time.
Yeah.
Let's look at all the stuff, because if there's anything you want to put in there, or if there's anything we think we could negotiate with,
Yeah.
sometimes the little things that are wrong are good negotiating tools later on in the works, because the process is we want this house. I'm going to write the contract, and we're going to talk about the price we want to offer and why we want to offer that price. And because sometimes, I've had folks, I know they listed at 300, but I feel more comfortable at 280 because this, and this.
Sure.
That's a good, Now, I'm not saying they're going to take the 280. I'm just saying, but, it does give you, because a thing for me is the buyer always needs to have a proper reason. I feel like if it's like, it's almost like buying a stock. If you go in and buy a stock that you just bought, because you hear it's good.
Yeah.
But you don't know anything about the company. You don't know anything about, the behind, you don't grow any kind of attachment to that. It's the same thing. If you don't grow attachment to the house, you're not really, hey, this is the house. It's real hard for me to, it's like, wow, are you going to be invested in it to the whole process? Are you going to bail out halfway through or get your, now granted, it's not always, sometimes they're like, hey, this is perfect. We went by, we looked at it a second up, it's great. We write the contract. It's accepted. The seller loves the deal. We're good with it. And then we get the inspection. Now, what I do is I give them 3 inspectors in town, local inspectors. And then I recommend a pest inspection and a regular inspection.
Yep.
Every house. I don't care. I mean, they can turn it down. They can say, I don't really need that. That's not a big deal for me.
Yeah.
Okay, but I always recommend it.
Yeah.
And the reason why I recommend it is because you just never know what's going to actually come on that house. It may look great on the outside. There may be all kinds of stuff wrong on the inside.
Yeah.
And you just never know.
So a home inspection, all of this is happening during the option period.
During the option period, yeah. There's always I recommend a 10-day option period. And that's a standard. It's nothing special. It's not like out of the realm.
Yeah.
Every realtor that's if you're representing the seller, you're going to be telling your seller, yeah, this is normal.
Yeah. I feel like 7 to 10 days is very common.
7 to 10 days
is
is very common. I recommend 10 only because sometimes the
weekends.
It's the weekends, and then you have some of the inspectors, especially in a market where it's starting to pick up now. Mm-hmm. Closings are up. Everything is starting to kind of move up a little bit. Definitely think the election, now that it's over, definitely plays a part in that.
Yeah.
Typically, this is our slower time, but I think it's being an election year. I think we're going to see November, December, January, even February, going to start really rolling in. And so as that happens, those inspectors, there's only so many inspectors in town. As they get busier and busier, it takes them 4, 5, 6 days to even get to that house.
And that way you still have time to contemplate, and make your decisions or negotiations based on that.
You never know, too, what they're going to come up with.
Yeah.
I've had, a lot of times, not a lot of times, but it does happen where you get the inspection report back and you're like, okay, well, this, that, and that, but let's say HVAC. And it says, would recommend an HVAC technician to come out and reevaluate.
Yeah.
Well, that doesn't mean it's bad. It doesn't mean it's good. It means he was unsure.
Yeah, that's
and there
not
was some
his
things
expertise.
that was not his expertise, so he was unsure. So it gives you time to call an HVAC guy out there, or if he's like, hey, the roof needs further inspection. It's got some granule loss. It's I don't know how old it is. That 10 days to me gives you the option to get your inspector out there and then get any specialized inspections that you need, whether it be plumbing, roof, foundation, electrical, stuff like that.
Yeah.
So that 10-day for me is a little better.
Yeah, and just because, the word option period makes so much sense to us because we're in this business.
Right.
Explain what the option period means.
So an option period simply means that you're going to put, let's say we write the contract and you drop off your earnest money at the title company, and then you drop off what's called option money. So the option money, you're paying for that option.
Yeah.
So, and I've had folks, well, I don't know if I don't, no, you've paid for that option.
Yeah.
You're paying money. So that, let's say it's $1,000 earnest, and we put in there a $100 option period. So the $100 is the option period. I put 10 days in that. It can be any days. It can be 7 to 10. It could be one day.
Yeah.
But I recommend 10. So you're paying $100 for 10 days. And in that 10 days, let's say you get your inspection, and the inspector is like, man, it's a list a mile long of everything that's wrong. That gives you a chance to back out of that deal. No harm, no foul.
Yep.
You can just say, hey, you know what? There's so much issues. I'm unsure that I want to continue. And then you can pull that earnest money back out.
Yep. And so exactly. So during that time frame, you do not lose your earnest money if you back out. So
that's correct.
You'll lose
the option money.
Yep.
The option money stays.
Yep.
So you might lose $100, or 150 or whatever you put in that contract, because everything's negotiable in these contracts.
Right.
Everything. Just about it. Just almost everything in that contract's negotiable. So whether it's $2,000 or $3,000 or $100 on the option money, or on the earnest money, and then 100, 200, 300 on the option money. The earnest comes back to you if you cancel that contract within that 10-day period or whatever that option is in the contract, and then the option money that you paid for, that does go to the seller.
Right.
Yeah.
And so your earnest money is I use the word good faith money. It's your money that you're putting on the table that allows the seller to accept the offer and take their house off the market, right?
Correct. Right.
And so, like you just said, you get through your option period, you've done some inspections, everything looks great, you may have negotiated out some stuff with you. Then it kind of comes back to me, and that's where I really come back in.
Mm-hmm.
So after option, and we know you're moving forward with the house, that's whenever we order the appraisal.
Right.
The appraiser.
Oh, so fun.
It's so fun. But the appraiser really does protect us as the lender and you as the buyer,
Correct.
to make sure that the house is really worth whatever you're paying for it.
Right.
That's truly what that report is. It usually takes about 10 days, for that part to come in. Title work is ordered at that point. The title company, we have a lot of great local companies, but
And we got some great title companies.
we really do. But basically what they do is just like it sounds, they give you clean title. They give a commitment to make sure that no one else can come back at some point in time and say that they were owed money based on this house or anything like that. So
that they
clear
have
title.
any clear, or that they have any
Liens or
anything to the title of the house, which is very important.
Yeah. Back end stuff is happening at that point. So we're actually, we've already gotten your pay stubs and stuff like that, but we're taking it a step further. We have to actually verify your employment. So don't quit your
Right.
day job. You do have to stay employed through closing. Sometimes that's a common misconception. You do have to keep your job.
And don't buy cars and furniture.
Yeah. We're gonna check credit at the last second and all those things.
Yeah.
So, so basically, a lot of things are happening on the back end. So from start to finish, from the time you've made an offer on the house and then up until closing date, you're usually looking at about 30 days. Would be like
Right.
the most common. Sometimes longer. Again, it's all negotiable.
I'd say 30 to 40 days is, I would say, average
Yeah.
for start of the contract to the close.
Yeah.
Yeah.
And then the best present that you get when buying a house is that your payment's not due for a whole nother month.
Yep, you get a whole month of
You get to skip a month.
You get rent free for a month, and then it hits you. But no, it's one of those things, and talking about after the option period and everything is great. We didn't find anything bad, or if we did, it was not too bad, and we were able to, negotiate that in.
Yeah.
And we move forward. Now, the appraisal, of course, is do you want to explain that?
Yeah. So
Because some people have asked me, what does the appraisal?
What is that? Yeah.
What is that?
Yeah. Or, and so basically, as the lender, the appraiser has to be an independent third party.
Mm-hmm.
So we order it through what's called an appraisal desk, basically, where they are actually hiring out the appraiser. So I don't even know who it is until I get the
I was going to say, you just kind of put it in there and it just kind of goes to.
Yep. Kind of.
Do you know? That's one thing I really don't know, and I've never, I guess, asked. Do the appraisers pick, or is it just assigned out?
It gets assigned out.
It gets assigned out,
Yeah,
okay.
so we have a panel of appraisers that we've approved to be, on our list, basically,
Okay.
that we like to work with that are, do a great job, things like that. And so it typically gets rotated out, but they can always decline it if they don't want to do it for any reason.
Gotcha.
And it would go to the next one. So.
Okay.
But yeah, and whenever they're looking, the word appraisal, people get that confused with like the tax office appraisal district a lot.
Oh, yeah.
So an appraiser is actually doing a market analysis, kind of like you were saying. It's based on market sales and comparable sales.
Yes.
That's where the word comps comes into
Comps
play.
comes in, yes,
So what
yeah.
would this house sell for? The appraisal district, that's the tax office. They're assigning values based on Lord knows what, but
Yeah, that's a whole
we do
nother
not have
segment.
time for that conversation. But
That's a whole nother
basically
segment of
just
how they figure that one out.
Yeah, and so just know that whatever it says online isn't what your house would sell for,
Right.
or what you should be buying it for.
Exactly.
It's a different thing. So
Different
this is
thing.
an independent person going out to make sure that the house is worth that. And then sometimes they may even require some repairs, based based on the loan type and things like that, which is
Always
easy.
FHA. They're strict sometimes on the FHA loans.
Most common is just peeling paint, stuff like that. It's
I get
it's
a lot
usually
of
easy
peeling
fixes.
paints, broken windows.
Got to have that smoke detector.
Got to have the smoke detector. Stuff like that. They're very
safety issues.
Safety
basically.
issue more than anything. Yeah, I've never seen them call anything that was, just out off the wall.
Yeah.
Which is surprising to me. I've had a VA one that was I felt off the wall a little bit. I felt some of the stuff he called was a little bit, kind of. When it's funny too. When I first started, and it was kind of an interesting deal, and I had called and was very angry and started to yell a little bit, and he hung up on me. I was like, I called him back and he hung up on me again. I was like,
well, you're not actually allowed to call an appraiser,
exactly.
right?
And then that's when I found out. I was like, oh, you're not supposed to call them? I was like, I had no idea, But the funny thing is, years later, I became really good friends with that appraiser.
Yep. No, they're all very
really good guys.
Nice people.
They're all really good guys.
And they're just doing their job. And
I was going to say, and that's
what we want them to do. We don't want to overpay for
when
a
I
house.
first started, I'm like, you know what I mean? Of course,
how dare him?
Now, 6 years later, I'm like, yeah, it's just what it is.
Yep, part of it.
Not even sense in getting angry about it.
Yeah. So, but what other?
So for me, I think after you've ordered the appraisal, and you've gone, and we've getting that back, of course. And everything's fine with the house, and you getting the appraisal. I think our next step is, does the appraisal agree with the contract price?
Yeah.
Sometimes they do, sometimes they don't.
Right. And at that point, you're back to the negotiating table because within that contract, basically, it says it has to appraise for sales price.
Exactly.
So if it doesn't, essentially your contract's void at that point.
Right.
Typically it's as easy as just making an amendment, and renegotiating. But there's definitely times where, there's some bigger variances. So, if that seller's paying closing costs or things like that, that may,
it may kill the deal.
It just depends. Yeah.
Sometimes I've had it kill the deal and I've had it not.
Yeah.
And you just never know. I feel like it's 50-50.
I actually had one this week that literally it came in almost 20,000 low.
Oh.
They knew it was going to happen. They were just shooting for the stars. So it was no surprise, thankfully. We kept
they were okay with it.
Yeah, they were like, it's
understood.
fine. Yeah, we kept our closing cost credit and everything, thankfully. So,
okay, cool.
you
Good.
got to keep that in mind too. But
yeah, and that's a big thing.
It keeps sellers
too.
honest, basically,
It really does, because sometimes, they I had an instance when I first, it was 2020, and it was in Southland. I'm like, I do the comps. I'm like, I think you should probably list it at 260. I can get more. It's worth more. I'm like, this is what the comps show. I'm telling you, well, I want to list it at, I think you want to list it at 275. And I'm like, I'll list it wherever you want. I might even can sell it at 275. The problem is going to be when they come back and do the appraisal.
Right.
Unless you get somebody to buy cash that's not wanting an appraiser.
Yeah. And I will say that on an appraisal, that is one of the things about it, is that they're looking at the last 6 months of sales history. So as like you said, during that time frame, we were seeing a big, demand and increase in sales prices and things like that. That appraisal is a little bit past tense. So they had to make some adjustments based on the market, and they slowly kind of came up to. But but that is like the one I would say downfall of it is whenever there are swings in demand, the appraisal is still working in the past sales.
I was going to say they're working in that last 6 months. So
Yeah.
it's kind of, and then of course, as I've figured out, when you get a commercial property and there's almost no comps.
Yeah.
And you're just at the mercy of the appraiser.
Yeah. Well, and I think with sales prices, from what I've seen over time, is it's like I feel like we have about every 6-year trend or so, thereabouts, where we start to see a big increase in pricing and demand, and then, like I said, things kind of level out.
Kind of level out for a little while, and then they'll go up again. And,
And I think that because more people in the younger generation have gone to college and started careers and had, started their families later in life, that it's also therefore their first house, they're needing to have a little bit more into it. It needs to check more of those boxes with sizing and things like that.
Yeah.
And so I would, from what I see on my side, I would say like average sales price for a first time home buyer is anywhere from like 250,000 and under.
Yeah.
Do you agree with that?
100% agree with that. I think and actually, the housing report came out last week for October of 2024, and going into that housing report, I think the median price was $235.
Okay.
The median sold price
Yeah.
in October was $235.
Yeah.
So that's about right.
Which I honestly think, especially since rates have come back down some lately and things, that really falls into the payment that you would be paying with rent. So you can by
it
all
really
means.
does. I was going to say it really does. And I've actually had some folks that had rent and they're we're paying this much in rent, and they get their house and they're like, wow.
Yeah.
Essentially the same as what I was paying for rent.
Right.
Exactly. But instead you're building equity.
Yeah. Something you will own one day.
Exactly.
I mean, you own it now.
Well,
but,
you own it now, and you're building equity in it. And when you do, upgrade, or if you, recently we had somebody we both helped too, not too recently. He resold his home. I helped him buy it 4 years ago. He sold it. I think he made $50,000 on his house, and it was a small home.
Yeah.
But he made $50,000 that he upgraded to his new home, and of course it was, he put that all down and got his payment to where he wanted it, and super happy.
Yep.
But I think that goes up with that, it always, all those housing prices.
The appreciation.
Yeah, appreciation. I think, really, realistically, what I've seen in the last 6 years, I've seen housing go up quite a bit.
Yeah.
In the last 6 years. But I entered right before the 2020 thing. And then,
so
I
you're right
saw
there
it
for
all.
The boom.
Yeah, like I saw it all go here, and I saw it here, and I'm like, whoa.
Yeah.
Man, I wish I would have had some extra money in 2019 and the knowledge I have now, because I would have bought.
Right.
And that was kind of leads into my next thing was, I get a lot of folks saying, well, when's the best time to buy? 5 years ago would have been the best time to buy, but the next best time is right now.
Right.
Because what do you see as far as, obviously we have a change in regime here with the elections. What do you see as far as rates dropping in the next 8 months, 6 months?
So I honestly think that, basically rates started going up because they were increasing rates to fix inflation, right? And I have always said that you can kind of backdate inflation happening to the pipeline being shut down. So as soon as it costs more for goods to be transported, they were more expensive. It all kind of connects. So I think that because the new administration is planning on opening that, drilling, things like that, becoming energy independent, that's going to therefore help the economy. Prices will come down, rates will come down. It's predicted that the feds will cut rates at least 4 times next year, which the Fed fund rate doesn't exactly translate to a mortgage rate. It's actually a short-term rate.
So that was my next question.
Yeah, that's a whole other can of worms too.
I was going to say my next question was that, we saw a rate cut a few times this year, like right before the election, I think, to try to kind of, but I didn't see really a reduction in mortgage the rate rates. For mortgage rates.
Yeah. So. I think actually, so leading up to that Fed cut, the rates had already been dropping, because rates basically come from investors who are, predicting the market, things like that. So the predictions were that they were going to be coming down anyways. So they already started to drop. Once they introduced that 0.5 point rate cut, didn't mean that we all of a sudden saw another drop,
Yeah, I was going to say it didn't really. It was just kind of.
Yeah, I mean, if you're investing in the market and things like that, you're not waiting for things to happen because then you're too late. You're predicting what's going to happen and trying to, move things the right way. So. And then right after the election, they actually cut it another quarter, like 2 days later.
2 days, yeah, I was going to say they cut it like a quarter.
Yeah. But what you can take away from that though is that the economy is improving, and that it's predicted to continue. There's obviously a lot of roller coasters involved with different reports and things like that. And I try to watch. I try to watch the news for just in the morning while I'm getting ready, because I cannot watch it all day. There's too much going on, but I try to just get a quick update so I kind of know what's happening and what to prepare for, based on jobs reports. And
that's kind of what I do. I kind of try to get a quick glimpse. I wish there was some kind of a summary report you could get, just a quick summary, because I had somebody, well, didn't you watch the news? I'm like,
Yeah.
I hate that show.
Yeah.
The news is my least favorite show because it's pretty much like 90% of it is just bad
Depressing.
stuff and terrible and how, and
Yeah.
I'm a very positive guy. So
Yep.
for me, I'm like, I don't need the negativity from the news.
Right.
But I do try to watch a little bit in the morning because
Yeah.
I am interested. Of course, I also invest in stocks. So
Yeah. So,
and
if
housing.
So if you take all of that, I mean, and people who put a lot more thought into the market than I would even know how to do, economists and things like that. But they are predicting that rates will be coming down next year. So the big thing with that, though, and what you have to think about is, don't wait necessarily for rates to come down because that's what everyone else is waiting
Refi.
for. Refi. You can refinance after 6 months of buying a
Yep.
house. So, and we actually have a program where we waive all lender fees and things like that whenever you refinance with us after your purchase.
So if they purchase with you guys and then they turn in a refi with you guys, no harm, no foul.
Exactly.
That's a
We'll
great
basically
deal right
help you as
there.
quick as possible,
Okay.
roll down that rate and get into a better payment. So, right now really is the time because you can get those seller credits to pay for your closing costs. You can probably negotiate on price, different
still have-
things like
exactly,
that. You
and
got
that's-
a lot of power.
That's what I tell people right now. I've had to, I don't know quite yet. I think I'm waiting for the rate. I'm like, no, dude, buy right now because as the rates drop, prices will rise.
Yeah.
That's just,
Yeah.
it's a counteractive thing. As rates rise, the prices are going to drop. But as rates drop, the prices rise.
Yeah,
It's
and even if the
a caveat.
prices, and even if the prices don't go up right now because we had increases recently in the
Right.
last couple of years, the number of buyers are going to increase because there's people who haven't been able to buy right now who will now be able to afford to. So if we do the numbers and you're able to afford it right now, it really is a good time.
It's a perfect time to buy
due to
right
all
now.
the perks and stuff that you can
I
get.
think you'll get a better deal, and
Yeah.
I think you'll have less competition.
Yep, date the rate and marry the house.
There you go. Date the rate, marry the house. I drink to that one.
Cheers.
Cheers. So is there? So let's see here. We did the appraisal. We kind of got off topic a little bit, but I mean, it was an important topic, and I think it's something that truly is important to first-time home buyers and investors and kind of everybody if you're looking to purchase a home. But after the appraisal and we get all that done and everything is good, we go to closing, close the deal, give them the keys,
Yep.
and we're about done after that.
Yep. There you go.
So, except for me, I still always check up on my home buyers, my home sellers.
Yeah.
It's weird though. For me, they become almost like friends.
Yeah.
They kind of become friends after
Yeah.
after a while. So
And I think that's the beauty of having someone local is that,
Yeah.
you do run into us at the grocery store or,
Yep.
Different things like that. And so it's something much more special than, doing an online app somewhere and never seeing that person.
It really is, I mean, just being able to see, oh, hey, what's up, Karah? Hey, Rusty, how you doing? I've seen a lot of my, folks that they'll come into the restaurant now. By the way, I do own a pizza restaurant here in town, so we'll plug in for the Angelo Ale House and Pizzeria.
It is the best. We go there often.
I appreciate. Yes, I have seen you guys there. I have seen you and your whole family there.
Yep.
So it's really. I love our pizza. I think it's great. It's my side hobby.
Yeah.
My side hustle.
Yep.
I can't get bored, so
You can't sit still.
Can't sit still. Yeah, I can't sit still. It's hard for me to just sit around and do nothing. So I always got to keep active and busy. But that's what I like.
Yep.
So.
Well, and obviously, whenever you're buying a house, there's a ton of big decisions that are going into that. But I think that's something everyone should always remember is that it's not the, online big name lender that's sponsoring your kids' soccer team.
Exactly.
It's the Hometown Mortgage Solutions,
the Hometown
Angelo
Mortgage
Ale
Solutions,
House, the
Angelo Ale
Einstein of
House,
Real Estate.
ERA, Newland and Company, Einstein of Real Estate. Exactly. And that's I'm so big on local stuff.
Yeah.
And it's not that I have anything against the national chains, but I realize they don't take as much care as we do locally, as us San Angelo people who care about the community, who want to see the community grow, who want to see good stuff in the community. And by the way, the more people buy homes in the community, the better, the stronger this community becomes. And San Angelo has a pretty high home rate.
Yeah.
As far as buying homes, we really do have a lot of people buying homes, and we're definitely blessed for that here in San Angelo.
Yeah, definitely.
Yeah.
And I think, I guess just like my final note to all of this would be that, through starting the process and things like that, if the answer will never be no. Never be no from me. Never be no. And so basically, it'll always be maybe not right now. Here's what we need to do. Here's what's next. Work on these things.
Yep.
Let's follow up in a couple of months. So whether it be credit challenges or, income issues, things like that, we can actually help you work through that
It's
too.
all fixable.
Yeah.
As a matter of fact, I sent a really good friend of mine a couple years ago. He had, that was their first home, actually. They'd never bought a home. And I sent him to you, and you're like, man, he's just he really just needs a little bit of work on the credit. It wasn't bad. It just didn't have a lot.
Yeah.
And you were like, hey, I sent him to do this, and this, and blah, blah. And I'm not kidding. 4 months later, he's on the phone. Hey, man, I just talked to Karah. We're good to go. Let's start looking.
Yeah. And I've had people, just to like say, again, that we're not going to put you off. I've had someone that was in credit repair for like 3 years. And it was a constant she had a lot to do, obviously, but she kept working and we kept working for her, and she's closed on her house and has a beautiful new home in Pauline. So, there's always a way forward. It's just getting the right people behind you to help you figure out that puzzle.
Very cool. Well, Karah, this has been a great experience. And, also, I've learned some things. Hopefully my folks learned some stuff. And all you first-time home buyers out there, the Einstein of real estate, Miss Karah Bowles, that's who you want to use. This is the team, the dynamic team here, the duo.
The dynamic duo. Cheers.
Dynamic duo. Cheers, Karah. Thank you for coming on my show.
Yes, sir.
Hey, guys. Thanks for watching High Level Real Estate Podcast, first ever with Miss Karah Bowles from Hometown Mortgage Solutions. I hope what we did here today is help to answer some questions and maybe shed some light on some stuff maybe you didn't know before. So if you have any questions on anything we talked about, leave a comment. We'll get back with you. Like, share, subscribe. Let us know if we can help you in any other way. Give us some more content ideas, and we're happy to help. Let's roll.